Yo, what's up, everyone? Today we're going to be going over a couple REITs that are on sale right now. So let's just get straight into it without wasting any time. And the first REIT that I'm going to show you is actually ticker symbol CCI. Now, what's really cool about Crown Castle is that look at the price of it right now. It is at a very good buying opportunity. And look at the market cap, $43 billion, but it yields 6.21%, man. I remember when this was yielding 3 to 2%, but it's right now yielding 6.21%. And I'm going to show you why the numbers are actually really good for this company. So let's go ahead and take a look at it. So look, the operating cash flow was $1.12 billion. Now, this is also known as the core FFO. And for REITs, this is the most important number because that's what they use to pay out the dividend with. And it was 1.12 billion, all right? Now let's see how much their dividend cost them, all right? So remember 1.12 billion and their dividend only cost them $678 million and it's down from 1 quarter ago. Why is it down from 1 quarter ago? Because they've actually been buying back their own stock. So look, they bought back $28 million 2 quarters ago, but they bought back only $1 million in the most recent quarter, but it's still pretty cool to see. This one is definitely undervalued right now. They're in some news right now about the AT&T Verizon FUD right now. I'm not really going to go into it because that's not what this video is about, but there are definitely some risks. So, of course, this isn't financial advice. Of course, do your own research. I'm just some random YouTuber telling you what stocks are at a good deal right now, in my opinion. All right, guys, so that was Crown Castle. Now I wanted to show you a different stock, which is ticker symbol PEAK, and this is Health Peak Properties. And so look at the price of this right now. It's $20 and it has a 5.8% dividend yield with an $11 billion market cap. So look at the price of it right now. It looks like it's at a good deal right now. And why is it down? Because of what's been happening to ticker symbol MPW. Of course, Medical Properties Trust. And let's just say this one is basically it's not doing so good. So yeah, this one has a market cap of $4 billion. But most importantly, Health Peak Properties Trust numbers are actually looking pretty good. So despite the low stock price, the numbers in core FFO looks really good. So let's go ahead and show you that because that's what's most important here. So here's the core FFO of $297 million. It's up from $255 million from 1 year ago. And as you can see, the assets versus liabilities are the exact same from 1 year ago. So that's good to see with growing core FFO. So that means they've been more profitable. But let's see how much their dividend cost them. So it only cost them $163 million. So they can easily raise that dividend. And the dividend is right now is 4 point, or what was it, 5.8%? It was 5.8%. And they haven't really been issuing stock here. REITs usually do that. So to see some REITs like going down in their total common shares outstanding are really cool to see. But it's not unusual for them to, of course, still raise capital through stock. So another thing I wanted to show you is it's kind of concerning, of course, do your own research, but they cut their dividend back in 2020 and they've just kept it at 30 cents ever since. So I think they're never going to cut it from 30 cents. That's just my opinion. They only have room to grow it from here because we just looked at the numbers. So if anything, I expect them to raise their dividend in the near future. And that is my thoughts on ticker symbol Peak, which you probably have never heard of. So that's what I'm hoping to do here. Show you some REITs that you probably never heard of. All right, guys. So for the third REIT, this one's actually the most risky one on the list because this stock price is basically at that close to all-time lows, or that pandemic low, I should say. But just to be completely transparent, I'm going to show you I have a bet on this stock right now. It's a call, and I don't really usually do options, but this is one of the few I have, and it's a very small portion of my portfolio. But yeah, it's a bet that we're hoping that the stock price goes up. So we're up 37% right now. We're $210. So that's cool to see. But more importantly, I wanted to show you the numbers of this REIT right here. So right now it's yielding 10.06%. So yeah, this one is a little bit concerning because of it's highly leveraged. As you can see, 86% assets to debt ratio. But we're going to look at the core FFO right here. So in the most recent quarter, it was $78 million. So it hasn't grown from 1 year ago, but we're seeing some short-term expenses from there's like this is a New York-based company. There's like a writer's strike going on right now, and it's really affecting the company's numbers. But let's go ahead and show you how much their dividend cost them. So it literally only cost them $51 million, and they had core FFO, of course, of $80 million. So they definitely have room to grow it, but it's literally at a 10% dividend yield right now. So I think they're just gonna keep it at 10. They're not gonna cut it or raise it. And you could just chill on that 10% dividend yield. And of course, this one is kind of the more risky one on this list. Like they had to cut this one during the pandemic and they didn't pay a dividend for a while. And then they reinstated it because this one is actually a billboard REIT. They own tons of billboards and it's advertising. So it has a lot to do with the American economy. And yeah, that's my view on out. Hopefully, it wasn't biased because of my call option. But yeah, that's kind of my thoughts on Outfront Media. Let me know your thoughts in the comments. And of course, if you're enjoying this so far, please hit that like button for me and subscribe if you're new. We're trying to get to 1,000 subscribers. And if you look at the number, we're getting kind of close. And let's get into looking at another REIT. All right, so the next REIT on the list is kind of a popular one. It is ticker symbol SPG or Simon Property Group with the market cap of $37 billion and it's yielding 6.7% right now. And I'm going to show you why it might have some room to grow here. So let's go and look at the financials of this company right here. So the core FFO was 1.13 billion. It did grow from 1 year ago, so that's cool to see. And let's go and look at how much that dividend cost them. It only cost them $606 million. So they obviously have a lot of room to grow it. And if we look at their total common shares outstanding, it's literally down from 1 year ago, which is very rare to see, or it's literally flat from 1 year ago. So that's insanely good to see for a REIT. So that's why I really like Simon Property Group. This one is, although it has a lot of debt, it is very safe and it's very predictable, like most REITs. So yeah, that's why it has that much debt. But I really like Simon Property Group. And if we look at the dividend right here, they've almost been raising it every single quarter, their dividend. Look at this. It went from, let's see, 2020, it was $1.30. They didn't have to cut it. Oh wait, they did have to cut it from $2.01. So yeah, they cut it from $2.10, and now they're slowly climbing it back, raising it almost every single quarter or every other quarter, and they've been slowly raising it. So yeah, anything I only see their dividend yield to go up from here. So I'm pretty bullish on Simon Property Group right here. So now let's look at another REIT. This is another one we'll just look at for fun here. So this is Welltower, ticker symbol WELL, and it has a dividend yield of 2.94%. So it's definitely not the highest yielder, but this one's a member of the S&P 500. And if we look at their core FFO of $416 million, so it is up from 1 year ago. So let's see how much their dividend cost them, and it only cost $303 million. So they definitely have some room to grow it. Now, what have they been doing with their shares? Now it looks like they've been issuing shares. Yeah, they've been issuing a lot of shares. So, hey, this one might be a little bit risky. I don't know. From 1 year ago, it was 463 million, and now it's 508 million. So that's a really big increase. This is actually my first time looking at it, so we're kind of analyzing the stock together here. But it looks like they have been raising debt, and because of that, they've been buying more assets with it. It looks like, and yeah, so their assets have gone up from 1 year ago. So it looks like they're actually doing something good with it, and their total revenue each quarter of $1.67 billion. So steady growth here. So yeah, that's a Welltower. Hope you guys did enjoy this video, and if you would, please hit that like button and subscribe if you're new, and check out my video up here of the Moomoo investing app and why it's actually better than Robinhood and Wheel, and why you should consider downloading it. So yeah, hope you guys have a great rest of your day.